So the UTI India Dynamic Equity Fund makes its investment into businesses across India, whether they are in the large, mid or small cap bucket. And our intention is to basically invest into those businesses which are growing and growing profitably. Our investment process is fairly straightforward. We like investing into businesses which are actually creating economic value. They are solving a customer problem, and while solving a customer problem, they are making profits for themselves. And while we select them, we especially like the ones which actually have a very, very long growth runway in front of them. So we don't like businesses which are moving around, jumping around all the time and are highly cyclical. We like profitable businesses and businesses which basically will continue growing for the long term. So that's a very, very simple approach. I think the risk associated with the fund, the first one that comes to my mind is that you should expect the fund to deliver returns which could be very divergent from the benchmark. So many investors look at our fund and say, look, in this particular year, you underperformed. In this particular year, you hugely outperformed. And I think you should continue expecting that from us because, like I said, when we design our portfolio, we're not looking at what the underlying index would have as its constituents. We're just looking at those great businesses which will continue to show great outcomes. We want to be patient with them. We want to be patiently invested in them. And we're not trying to predict what the markets will do in a particular year or in a particular environment. So yes, biggest risk is deviation from the benchmark, but that's something which we feel comfortable and confident about. Well, I joined UTI 25 years back as a young analyst, and while I was learning the business, I was told by my seniors that, look, you can never underestimate the importance of governance. If a business is not showing you the right kind of governance traits, as a minority investor, as a shareholder, you'll never end up making money. So when we look at the ESG debate that's been going around the world, I just realized that the environmental and the social factors perhaps are as important as the governance factors. If the businesses are not taking care of their stakeholders, if they're not being fair to the entire ecosystem, whether it's their employees, whether it's their suppliers, whether it's their distributors, the business will end up facing problem at some stage. Equally, if a business is not environmentally conscious, if it's not making the right kind of efforts in terms of investing into technology which leads to a better environment, such a business too will perhaps get onto the wrong side of the local regulators and would have problems in terms of running their businesses in an uninterrupted manner. So I would say, while G was always incorporated into our strategy, over the last few years, we've realized the importance of E and S, and we are trying to incorporate that into our core research rather than following just a checkbox approach. One must understand that as far as global growth is concerned, this big chunk of the global growth is coming from emerging markets like India. India is about to become the third largest economy, so we are not just, one of the many emerging markets around the world. We are a fairly large-sized economy, 1.5 billion people, of course, 4.5 trillion in terms of GDP, already the fifth largest, about to become the third largest within the next 2-3 years. And I think the only economy of this size, which is continuing to grow at 6% and should continue to grow at a healthy rate for a decade at least. So my observation is that a client portfolio, a typical investor portfolio here in the UK must have some allocation to a very steady emerging market like India. And I would say, yes, our fund is all about picking those right businesses which are doing the right things, which are on the right side of ESG and having a profitable growth as their core principle.